Hi everyone, it's Christina from Array. We're a full-service Nanaimo-based marketing agency serving clients across the country. With over 42 award wins under our belt in the past decade, and over half are island-based businesses, including one for our very own Bahia, we couldn't be more proud to be participating in the 2021 Bahia Summit once again. Thanks for having us. There are often familiar faces at this event, and although we'd love to see you all in person, this year let's keep it virtual. Please stop by our virtual trade show booth to say hi to the team. Now, let's sit tight and learn more about creating economic equality through philanthropy. Welcome to the session on philanthropy's role in deploying capital in a new economy. Please give a warm welcome to our moderator, Peter Elkins.
Hello, everybody. We're here today with Andrew from the Community Foundations of Canada, and we're going to talk about philanthropy's role in deploying capital in the new economy, which is something both Andrew and I are very interested in. And thank you, Andrew, for taking the time. I know you're busy out in Toronto, so we appreciate hearing from you and hearing some of your updates on what's going on at the Foundations of Canada. Do you want to talk about kind of where you guys are at today and what's going on with this initiative?
Yeah, Peter. Maybe I'll take the opportunity to thank you and the hosts of this gathering, this summit, to be here and to talk about philanthropy. When I was preparing my comments, I was thinking about the last 19 months and how it's been a roller coaster of emotions and feelings. We've all been living through the most precarious moments of our lives, and it certainly is taking a toll on all of us. The anxiety of job losses, failing businesses, extraordinary inflation, extended periods of isolation have left many of us contemplating meaning and purpose in our lives. Not to mention, we've come face to face with the growing social unrest of systemic racism, a climate crisis, exacerbated inequality. At times, it feels like the convergence and the immediacy of these troubling trend lines is just too much to bear. I've become familiar with the term despair in the last 18 months, as I've heard from many Canadians who have lost loved ones to COVID-19, lost their livelihoods, connection and bond to those that they loved the most. The most colloquial interpretation of despair is rooted in a loss and a complete absence of hope. How many of you have experienced despair at some point in the last 18 months? If not, I am sure you have experienced despair at some point in your life. And so where does one go when experiencing this loss of hope or despair? Where can we find a sense of hope once more? And for me, I picked up an old book of mine and I read it a few months ago. And I started to reflect on it a little bit. And some of you might be familiar with the book. It's called Man's Search for Meaning. And it's written by a gentleman by the name of Viktor Frankl. And it's a pretty popular book with more than 12 million copies in print worldwide. It's often regarded as one of the greatest books of our time, and I keep a copy of it close by. For those of you unfamiliar with Viktor Frankl, Frankl was a Jew and a psychologist who was cast into the Nazi network of concentration and extermination camps during World War II. Incredibly, he was also a survivor and lived to tell his story and write about it. I'm going to provide you with the following quote from his book. "He who has a why to live for can bear almost any how." Frankl describes poignantly those prisoners who gave up on life, who had lost all hope for a future, and who were inevitably the first to die. They died less from a lack of food or medicine than from a lack of hope, a lack of something to live for. By contrast, Frankl himself kept alive and kept hope alive by summoning up the thoughts of his wife and the prospect of seeing her again and by dreaming at one point lecturing after the war. Consequently, Frankl's work and literature is predicated on a search for meaning and purpose of one's life, particularly in the face of despair. Why? He wanted to understand the source of happiness. Where does true, enduring happiness come from? Frankl wrote that happiness cannot be pursued. It ensues as a result of living a life of meaning and purpose. The paradox being, the more directly you pursue happiness, the less likely you are to achieve it. Let me repeat that one more time. The more directly you pursue happiness, the less likely you are to achieve it. Happiness comes from how you live your life. Franklin goes on to articulate that the discovery of meaning and purpose can be achieved in 3 ways. Number 1, by doing the work that matters. Number 2, loving others unconditionally. And 3, finding meaning in suffering. Now, you may all ask, what does this have to do with philanthropy? It has almost everything to do with philanthropy. Philanthropy is literally about the love of mankind. Philanthropy, however we choose to express it, gives us all meaning and purpose and leads to enduring happiness. But before I delve further into philanthropy, I would like to speak about corporations and capitalism. After all, this summit is about the economy and economics. On August 19, 2019, the Business Roundtable, a group of 181 of the most influential CEOs of major multinational corporations, issued a statement redefining the purpose of a corporation. Now, if you were like me and attended business school in the 90s or any time before then, the purpose of a corporation was clearly articulated as maximizing shareholder value. Who remembers that? Stated in another way, all activities a corporation undertook was to support the well-defined and easily measurable purpose of maximizing wealth for their respective shareholders. Now, the Business Roundtable made a landmark claim. The titans of capitalism suggested that shareholder primacy was an old, obsolete, and much too narrow view of a corporation's purpose. They were clear that shareholder primacy was not serving communities or the climate very well. In fact, they may be exacerbating the fundamental challenges plaguing social cohesion in our communities and in our ecosystem. Consequently, the Business Roundtable committed to leading their companies to the benefit of all stakeholders, including customers, employees, suppliers, communities, and shareholders. I want to take a moment to draw the analogy between purpose and meaning to man, as identified by Frankl, and to that of a corporation as identified by the Business Roundtable. Frankl contends, at the human level, doing the work that matters, loving others, and finding meaning in suffering is our pathway to happiness. While the Business Roundtable talks about serving the needs of a broad stakeholder group beyond profit maximization as a means to continue raising the standard of living for generations to come. In the book, Conscious Capitalism, in reference to Frankl, it is noted that just as happiness is best experienced by not aiming for it directly, profits are best achieved by not making them the primary goal of the business. Profits are the outcome when companies serve their highest sense of purpose, as detailed by the Business Roundtable statement. So, In both the case of Frankel and the Business Roundtable, happiness and profits, respectively, are not achievable directly or in pursuit of, but rather how man and corporations live out their sense of purpose. Take the time to reflect upon this. How often do we pursue happiness directly? I know I do. Or aim to pursue profits as a primary driver for our respective ventures. And I've also done that. Does this make us truly happy? Wealthier? Does this provide us meaning or purpose? Well, let's talk about philanthropy. In an article published in the North American Review in 1889, steel magnate Andrew Carnegie contends that millionaires should be ashamed to die rich and should instead use their wealth to organize benefactions from which the masses will derive lasting advantage. This concept is known as the gospel of wealth and prompted Carnegie and his peers to create living trusts, foundations, if you will, to distribute their wealth for the public good during and after their lives, setting the standard for modern day philanthropy as we know it. Carnegie was clearly a man looking for meaning and purpose. All the money in the world at that time was not enough. He was in pursuit of meaning and purpose. What Carnegie knew, and many years later, the Business Roundtable was crystal clear about, is if a business seeks only to maximize profits, to ensure shareholder value, and does not attend to the health of the entire system, sure, short-term profits may indeed happen, perhaps lasting many years. However, neglecting or abusing the other constituencies in the interdependent system will eventually create harm, not just for community, but also for investors and shareholders. More and more CEOs have become aware that their business do not solely exist to serve itself and are very much a part of a complex, interconnected, changing system. They will see that shareholder value is important, but certainly not the only purpose. Modern day philanthropy was created to be the vehicle to connect the old purpose and meaning of corporations, which is maximizing shareholder value, to Franklin's search for the meaning at a human level. In other words, earn and accumulate as much wealth as you can in one hand while giving it away in another. This relational construct of creating wealth in one hand and giving it away in another is under great scrutiny today. Why? Because it fundamentally ignores how the profits were made in the first place. Oftentimes, the pursuit of profits is in conflict with the social and ecological challenges philanthropy is confronted with tackling. The economy is being reshaped to face this reality. As an example, new language has been introduced in the last 19 months to drive the point home. Words and phrases such as build back better, just recovery, and inclusive economies all indicate one big thing. Status quo is not on, and incremental change is simply not good enough. I am sure all of you have become familiar with these phrases as they show up everywhere, including this summit. The new language isn't simply aspirational or prophetic. It provides context for what communities require. Communities require transformation. Every sector in industry is rapidly rethinking how they create value. Philanthropy is doing the same. We know well Economic and social inequality is plaguing our communities at a dangerously high level. And the traditional way we coalesce philanthropic assets and granting will not meet the tests of a post pandemic recovery. We should also acknowledge we are at the advent of building a new economy, a new conscious outlook, and a new psychology that will address inequality unlike the way we've seen in the past. Philanthropy must lead this conversation by examining our role. The question in front of us, what is philanthropy's role in the new economy? And how will we address inequality as institutions? Although philanthropy's role has been to resolve certain outcomes related to economic inequality, we also have to acknowledge that we've been a great beneficiary. According to the Broadbent Institute, the top 20% of Canadians hold 68% of the wealth in this country. The top 40% of Canadians hold 90% of the wealth. From this, we deduce that 60% of Canadians share in a mere 10% of the overall wealth in Canada. Economic inequality is alive and well. In fact, 91% of Canadians think economic inequality exists right here in Canada. As we all know, the pandemic has caused a further proliferation of this inequality, and the numbers are likely worse than the ones I cited. Philanthropic institutions have benefited from an economic system that creates excess wealth. This wealth is used to establish foundations in the same way that Carnegie established one, endowments, and things called donor advised funds. In turn, we redistribute wealth to alleviate issues created by that same unequal distribution of that very wealth. This was the conundrum of Carnegie's model, in which he stated that millionaires should be ashamed to die rich. We are fortunate to have philanthropic institutions which capture excess wealth creation, work with altruistic, generous, community-minded donors to do good. As a Canadian, I am grateful to have such infrastructure and institutions in Canada. We have some of the most impactful and innovative philanthropic systems in the world. However, are we really addressing the systemic issues driving inequality, or are we part of it? Are we redistributing enough of that wealth? There is no clear right or wrong answer to this, and communities will have to weigh their options. But perhaps the answer is not solely focused on what we spend, but how we invest. After all, our invested assets far exceed what we spend. So let's talk about capital and let's talk about investments. Philanthropy is a critical part of the economic system. In Canada, community philanthropy alone has well over $6.5 billion of invested assets. Our business models began with an approach that called for investing with the primary, and in some cases, the sole purpose to maximize income. Subsequently, using the income to support critical services and supports at the community level. The misalignment is between capital and income. Capital is something typically not subject to scrutiny from a social impact standpoint, while income is all about social impact. The misalignment creates a paradox. Private and public foundations, family offices, investors, and wealthy individuals, we all have relationship with capital. Often we value preserving capital. After all, it has taken a lot of effort, sweat, and generations to accumulate it. We have taken risks to acquire capital. Capital is empowering. It provides security, certainty, and safety. Capital feeds our sense of well-being. In fact, our economic system is centered around the acquisition, development, and deployment of capital. Our ability to innovate and create new products and services hinges on capital. Our economy is great at producing capital. The GDP growth rate in Canada has been stellar for the past 60 years. The challenges we face, are not centered on the system producing capital. It's on the system investing and deploying capital. Thomas Piketty is the author of the book Capital, the 21st Century. Let me bring you into one of his contentions. Piketty contends capital has grown over time faster than the overall economy. Let me repeat that. Capital grows faster than the economy. In simpler terms, those who hold capital accumulate more capital at a faster rate than those who generate income. In the charitable sector, funders can build capital at a faster rate than frontline operating charities can build sustainably through annual sources of funding. This is a powerful force which is increasing inequality, both in society and in the charitable sector. I would ask you to consider the truth of Piketty's contention in the Canadian context. The last 19 months have proliferated this pattern. We have heard about the K-curve recovery. Canadians who held financial capital in the last 18 months have increased the amount of capital they have at dramatic rates in a very short period of time. At the very same time, the incomes of the bottom 60% of the population have decreased or remain the same. Capital and income do not share the same growth patterns. We have all experienced this. Canadians are watching as real estate prices soar. All major stock indices bottomed out last March, but have rebounded. As I mentioned earlier, economic inequality is alive and well. And those with capital are doing well, and those without it continue to suffer. Rising economic and social inequality threatens social cohesion and our peaceful democracy. We can't be part of the solution if we ignore other parts of the economic system through which we build our capital from. Are we at the point where primarily safe approaches with philanthropic capital are no longer sufficient? We may consider reorienting around the belief that philanthropic dollars serve as risk capital for innovation and positive social impact. Which now brings me to our role as investors. We must reconsider our relationship with capital. The investor of tomorrow is vastly different than the investor of today or yesterday. Larry Fink, the CEO of BlackRock, the world's largest asset manager, in his 2021 letter said to CEOs, "There is no company whose business model won't be profoundly affected by the transition to a net zero economy." Larry Fink also said, "Net zero demands a transformation of the entire economy. Make no mistake, this includes the acceleration of capital deployment towards social ventures and social entrepreneurship. Social enterprises, socially and ecologically responsible investing are the primary tool for bridging the gap between capital accumulation and curbing inequality. If we as capital holders are serious about tackling inequality in a transformative way, we must invest in social enterprises. If we hold philanthropic wealth, we must work towards using 100% of our capital towards tackling inequality through the development of social enterprises and investing aligned with our mission. Now, we can't talk about the economy unless we talk about the next generation. And let's talk about one of the most disruptive generations of our time, the millennials. This group was born between 1981 and 1996. They are between the ages of 25 and 40 years of age. Some quick facts. 43% of millennials engage in impact investing compared to 12% of boomers. A 2019 Morgan Stanley survey showed that 95% of millennials backed sustainable investing compared to 85% of all investors. A study by Alliance noted 64% of millennials made investment choices based on values compared to 40% of boomers. A report from US Trust noted that 76% of millennials consider impact when investing compared to 29% of boomers. I can go on, but you get the picture. This pattern signals a generational collision in attitudes. Charitable giving has become charitable living for millennials. They are adopting Frankel's pursuit of happiness. The attitude shift suggests that millennials have less tunnel vision when talking about finance, politics, and social issues. Instead, their sense of the economy is interconnected, as the Business Roundtable suggested, not at least because they do not treat an issue like the environment as a mere externality to their economic model, as has been the case thus far. Clearly, business models and philanthropic models are adapting to the new reality, influenced by the next generation of leaders and influencers. Philanthropic organizations are used to addressing community issues that exist beyond its institutional borders. Are we able to effectively address the issues within it? We started with Viktor Frankl and his man's search for meaning. We followed with the Business Roundtable and a redefined purpose of a corporation. We ended with how philanthropy must be the bridge between both those paradigms. We can't pursue happiness and profits head on. It's how we live our lives and lead our companies that matter. Thank you. Back to you, Peter.
Thanks, Andrew. It's exciting, and I think it is hopeful. And I know, I'm very interested in, what the ideas are that are out there today around, what community foundations can do. We certainly have a few of them here on Vancouver Island that would be interested in, what the next steps are. So I'm wondering, is there a playbook that's being worked on for community foundations to think more on these mandate questions and how to move forward?
It's a good question, Peter. I think, like with everything these days, there is no playbook. But to your point, I think we're working on it. Foundations, philanthropic foundations across this country have responded with great generosity and innovation, particularly through the pandemic, and are constantly looking for new ways to do more, especially now. The charitable sector in this country has been decimated because of the pandemic, but they are a resilient group of organizations, and our job as funders is to determine how we can get behind that resilience and to help them rebound and innovate into the future. We have many tools at our disposal. We continue to grant at levels well above the government mandated minimum. And we're putting more and more of our investments into social entrepreneurship. We're finding ways to finance charities, and we're taking steps to invest differently, not simply with a profit maximizing purpose, but also demonstrating that we have to look at social factors, ecological factors, and governance factors when making those decisions. There's more to do, and we'll continue to do more. And I guess the exciting thing is we are writing the playbook as we go.
That's what I say. That's what's exciting about this time now. That coming out of the pandemic, there's a real opportunity to think about this, and where these can go forward. It also seems to me that there's a real leadership opportunity for the foundations in these smaller communities to lead these kind of initiatives and really think differently about how they want to come out of the pandemic and enter the emerging economy. And certainly, the social enterprise piece is getting more uptake. There's a lot more going on here on Vancouver Island with social enterprise, as well as impact investing. And I know that's, becoming a hot topic, especially on the island, how we're deploying our capital differently. So can you think of, are there any examples from other communities that are underway today that we could draw from that?
Yeah, absolutely, Peter. The Canadian Canoe Museum was something was recently in the Globe and Mail. I think it was in the Globe and Mail yesterday. And it's a large initiative, multi-million dollar initiative. And it's an important part of the social fabric in Canada to get that museum up and running. And it'll be located in Peterborough, Ontario. And there have been a few community foundations that have stepped up to provide bridge financing and loans to this particular organization, recognizing that government is also a partner. And so it's looking at not simply investing in the TSX or the S&P 500, but it's saying, hey, there's good work happening, and how can we extend some of our capital to bringing alive an organization like the Canadian Canoe Museum that will be a real cultural icon in Canada. And I know there's a few, at least one community foundation on the island that is helping out in that regard. So, but there are many others around the country that have come together on this important initiative. So that's a real big one. I was out in the Sunshine Coast before the pandemic, and very small community foundation out there, and even they were looking at ways of how they can work with the local credit unions and local venture agencies, and how they can deploy their capital to support triple bottom line businesses and get young people started in their ventures. Not a lot of people know this, but Canada ranks #1 in the world in social entrepreneurship. And it's because we've got some of the most diverse, smartest young people in the world. And we have community colleges and universities who actually have very specific programs to develop social entrepreneur leaders into the future. And we have to find a way to get behind this generation to really accelerate the work that they're doing. And I talked about philanthropic capital in my remarks. Philanthropic capital has to serve as risk capital and innovative capital in driving social entrepreneurship. Banks and traditional sources of venture capital are often find it difficult to get behind these types of ventures, but it's a natural place for where philanthropic assets can be deployed, and creating jobs, building the economy, but also doing social and ecological good at the same time is the future. So we would be well served to put our to line our ducks with this generation and their leadership.
Yeah, like I said, everything you're saying just leads me to think it's exciting and hopeful, and there's a lot of opportunity both for impact investing and social enterprise financing for these community foundations to really take a leadership role at whatever size the community is or the foundation is. Now, is there anything holding them back that you've come across? Is there any laws or legalities that would hold the community foundation back from deploying the money as say debt financing versus keeping it in the traditional market they're in?
Yeah, like I live in Ontario, so maybe I'll speak about this. There's something called the prudent investor rules, right? And even in went to business school, a prudent investor was somebody that diversified their investments and maximize their returns, and there's a few other criteria. And so there's a social conditioning around how you invest, and ultimately that leads to what you invest in. But there's nothing indoctrinated legally that says you should look at social and ecological factors. And I think the world's changed. I think we're dealing with some different things these days. And the business roundtable says 181 CEOs said, hey, we can't be just trying to maximize value for our shareholders anymore. That's the wrong purpose. Um, and so I think we have to take a note from that, and we have to say, hey, we have to look at a broader purpose. And so I don't feel as though there's impediments in the regulatory environment. Perhaps there are, but I think the greater impediments are our minds. I think our mental models, our mental models are built around thinking a certain way, and that isn't easy to change. And the fact of the matter is that, let's face it, capitalism and that thinking has worked for us quite well. I mean, this country is built on a certain type of capitalism. The challenge is that it hasn't worked for all of us. And there are those that are disadvantaged. And at the same time, the IPCC report from a couple of months ago said that in the next 10 or 15 years, the temperature of the Earth is going to go up 1.5 degrees Celsius. We have a really big ecological issue on the planet. And a lot of it has to do with how our businesses are run. And the only thing that's going to change that is if we can find a way to change our mental models. I think that's the most transformative thing we can do. Oftentimes people hide behind regulatory barriers because they don't have the solutions otherwise, or it's too hard to change the way that you think. But the mental models is the primary impediment.
Yeah, well, thanks, Andrew. That's no, like I said, I think there's a lot of opportunity, especially in the social enterprise, and it's what I'm getting out of this message. That there's a call out, people that are entrepreneurial to start thinking about the social entrepreneur model as opposed to just the entrepreneur model, and figure out these community initiatives. I actually stumbled across a coffee shop the other day I didn't realize even existed, and we were out on our bicycles, and it was run as a non-profit, and she had relationships with hard to employ agencies, and she wasn't connected with any philanthropic foundation or agency or group, and I thought, there was a leadership example. So she wasn't running a program as a nonprofit. She was running a business as a nonprofit, and taking on that social enterprise piece on her own. So that was a real signal of the kind of leadership we're seeing in the community now. Not just the charity sector getting into social enterprise. Yeah, and anything else that you want to add to that? I mean, is there anything that you can think of that might be helpful to people watching of what the next steps are and what they could be doing or thinking about?
Yeah, there's a real conundrum right now, and I think the pandemic is something that is just weighed us down, and there's so much precarity associated with the future. But at the same time, it is the moment couldn't be better to have a very transformative impact on our economy and to do things differently. The question is, do we have the energy? Do we have the will? And I think that's the thing. I think if we can find the energy amongst the let me go back to Viktor Frankl. If I had a whiteboard, I would draw up a formula. But Frankl, he talks about despair, but he said that despair equals suffering minus meaning. And so if you think about that as a mathematical formula, to reduce the amount of despair you have to find more and more meaning in the suffering. And then you can eventually bring despair to zero, right? Because it's a function of it's suffering minus meaning equals despair. And we're all kind of suffering right now in a variety of different ways. We would have lost loved ones. We've been in isolation at times, long, deep isolation. people have lost jobs, livelihoods. We've seen an erosion to our economic status. Um, uh, just general stress and mental health and well-being in some cases has deteriorated. But we have to find the meaning in that. And when we find the meaning in that, and we can start to think about creating an economy that is inclusive, that does include more and more people. Um, Most Canadians, as I mentioned, don't own financial assets.
Right.
They don't own real estate, stocks and bonds. Now, the other 40% who do have done well in the last 18 months, or have done well from an economic standpoint, generally speaking, because those things have gone up. But how do we get to an economy where that 60% is a lot smaller? I think there's always going to be people that don't own financial assets. That's just part of any economic system. But 60% seems a bit heavy.
Right.
So you think about, there's a generation of Canadians who are 20 years old, in their 20s, maybe even in their 30s, who are gone to school, who've educated themselves, who are coming to grips with the reality they may never own real estate in this country unless they inherit it. And I don't think that's ever happened in the history of our country. We're well over 150 years old. And what generation ever thought they would never have an opportunity at home ownership?
Yeah. And what now are you guys, as the kind of community foundations of Canada, do you monitor where the philanthropic investments are today? Like, I mean, do we know how much is in Canada, how much is in the US, what the impacts are of the endowment?
I don't have those numbers offhand. I could speak to them generally. Community foundations are typically have balanced portfolios. So they would have assets invested in Canada, the US, and internationally or globally. They would have equities and bonds. I would say that a typical community foundation could have anywhere between 20 to 50% of their assets invested in Canada, and another 10 to 30% invested in the US, with the balance invested globally. But that's typically, the composition of a balanced portfolio.
Right. And so there's really nothing preventing a community from, well, I guess what's preventing them is, like you say, it's the leadership and the will, but there's nothing preventing them from starting, say, a debt fund that people could donate to at a community foundation, that would be lent out in that community to social enterprise. It wouldn't be an investment fund, but they could actually direct their donation to that activity, as opposed to going into that balanced portfolio. Would you say that's correct?
Yeah, community foundations can take on all sorts of investments, but they can't act as an investment management company. They would be in violation of provincial security laws, but they can be an investor, and they can invest in debt, in public companies, which they already do, and in private enterprises. So that's available. But still, we have to sort of build out the right mental models, and then the right organizational models to facilitate that.
Yeah, well, and that goes back to my first question. Where are we at in the playbook? But it sounds like that requires that individual leadership in the communities to start piloting these ideas and starting to create some best practices. Yeah. Well, thanks, Andrew. That's been, like I said, been very, very exciting and hopeful and interesting, and certainly it's given me a lot to think about, and how we can impact our own communities in this regard. And I guess for now we'll go to take some questions from the audience and see what people have in mind after hearing your great comment. Thanks.
Thank you, Peter.
you for joining us in this session, and thank you, Andrew, for your incredible call to action and being with us here today. I'll start by saying that we're going to skip the Q&A. As you can see, we've actually gone right to the roundtable because I think this is really a better way to approach this. It's a roundtable. So for everybody that's on this session, if you haven't done this before on Zoom, if you look down at the bottom of your screen, it'll say reaction. And if you click on that, you'll see a button that says raise hand. So you can see I just did that on mine. And you can lower hand once you've completed. So if you want to pitch an idea, make a comment, you have a question for Andrew or myself, really anything you want from a dialogue point of view to please raise your hand, and we'll get to you in order. So I have to say I'm a huge fan of Andrew, and I'm a huge fan of this call to action. It's interesting. I've been exploring this subject, for quite some time. I actually approached it from the venture capital, community economic development lens, and we kind of landed in the same place at a similar time. But it really is timely that we look at our endowments, whether they're trust, cities, or community foundations, which is where Andrew's coming from, to really start thinking about place-based and I could spend hours talking about why the system is the way it is and what the faults are. And Janet, my business partner, I've done quite a bit of research in this area, but the reality is it's time to start challenging these current models. So Andrew, there's some questions that have come in. We have to multitask here. There are some questions that came in, and one of them we'll start with is the idea of where can these community foundations invest their money locally today. So do you have any thoughts on that, even hypothetically? I mean, I certainly do, but do you have any thoughts on that hypothetically, where you would advise or invest money yourself as a volunteer board member on a community foundation that has less risk, that sort of thing? So maybe talk about today what you would recommend.
Yeah, I think there's a view on investments, and oftentimes we parse it out, we fragment it because we can our minds understand things in different buckets. And so when we invest our money to primarily drive an investment return, we want to invest it in the conventional markets. So we'll invest in public companies, stocks, and bonds. And then what's showing up now is a desire to invest with impact. And oftentimes it's difficult to conflate impact, either social or ecological impact, with investment return. And so we then parse out part of our investments and we invest in impact. And that's where the local investments come into play, to your point, Peter. So we typically are now reaching out, not all community foundations, but some are reaching out into their local communities and saying, we have dollars available to invest in social impact, and putting the word out there, and then looking for the quote unquote deal flow. And that will come with a lens of, okay, what does our capital look like here in terms of protecting that capital as an investment? Number two, is the investment, if successful, going to have a positive social or ecological impact? And then sort of normal due diligence that you do over investments. And that comes in a variety of ways. It just depends on the local community, what's happening there, what are the priorities, the level of deal flow or level of social entrepreneurship. But local investment is usually done through an impact lens.
That's great. Yeah, and I'll just add to that from our work, and again, what we do is open source. So I'm happy to share this with anyone that's interested, but from a very proactive, what we've uncovered is Stanford University's had incredible success with what they're calling a search fund. And if you just search funds, you'll see quite a bit about it. And we did a project, actually there's a published paper through Royal Roads on impact search funds. And this would really be what mergers and acquisitions from a place-based social community point of view would look like. So I would encourage people to consider that. The other one, and actually I see somebody's mentioned municipal bonds. Challenge with bonds is the interest rates, and that's always going to be a challenge. And then the other question here is mortgage investment funds, and I've done that work. It was actually sponsored by the BC Construction Association because of labor issues. And what we've uncovered is you can actually repurpose mortgage investment corporations, which is a tax act in Canada since 1974. And what we uncovered was you could actually issue longer amortization and higher LTVs, the down payment mortgages. And where we landed was QuadReal or the provincial pension. They showed interest before COVID and exploring it further around essential services. So people that matter in your community, that are having trouble affording there, you could actually engineer this. And then of course you could actually, I would argue, you could take this right down to any level of society. And we actually started to explore it with the Indigenous housing group for BC. So that conversation's there. And then of course we've been working on Project X, which is really a new way of incubating and accelerating primarily climate mitigation. So there is some big ideas, but there's also some good work on Vancouver. I know Scale Collaborative is doing a debt financing product, and they're connected to the Victoria Foundation. And I know they're also teaching, I think it's primarily nonprofits at this point, but teaching them how to assess buying a company and then repurposing it. So we've got some small ideas, we've got some big ideas. And it's just, like I say, it's the will and the leadership now. The other thing here is talking about the moving the conversation forward. And so I'm just going to ask Tanya if she wants to turn on her microphone and her video if she wants to do the video and talk about the conference. And this is our friends at United Way, and I think Cora was the thought leader behind this, bringing people together, and so there's actually a place to convene this. So Tanya, I'll let you take it from there and be a bit more descriptive.
Yeah, thank you very much. I was just putting in the chat saying that the Propelling Purpose Summit is coming up, and really this is all about bringing together collective partnerships, coming to the right tables and meeting up with people that want to be of this work. And Coast Capital, I'm from Coast Capital, and we are the sponsors behind the Propelling Purpose Summit. And if anybody on this call wanted to join that summit, wanted to attend, we have a discount code, and anybody is welcome to reach out to me. I'll put my email in the chat. You can reach out to me. I'm happy to give you that code, because this is such a big issue, and it's going to take the power of partnership to really move these things forward. And the more people that are thinking like this, Andrew, everything you said just really hits hard with the work that we're doing every day here at Coast. My title here is social purpose from the Social Purpose Office, and this is what we're doing every day. The other thing I wanted to mention is that the community foundations and Coast Capital are both founding partners in New Power Labs, which is a collective group of people nationally that are getting together to further these conversations. So that's another group. Again, I'll put it in the chat if anybody wants to check that out.
Great, thanks, Tanya. Super. And Mark, I see your hand's gone up. If you want to turn on your microphone and or your, here we are.
Yeah, hi. Yeah, fantastic, Andrew. Thank you very much. I missed the first 10 minutes because I was pitching to Community Futures during the beginning of this presentation. So it's very dear to my heart about asking for financing at these times. What I was curious about is, we're setting up to be a B corporation, and we are trying to create a very eco-friendly, community-based business, sort of like corporations originally were conceived of way back when. And The struggle that I have is trying to equate what that value actually means, so that when you present to somebody like a funder, they can say, okay, great, you have these social programs in place, you have this social equity, you have this social stance. But how does that change the bottom line of essentially your inflow, outflow, and what the business's prime objective of capitalism is? And I was wondering if you've run into, Andrew, in any of your work, a way of kind of evaluating the social impact for a company.
There is one large company that comes to mind, and that's Unilever. And Unilever, their CEO, and his name slips me, but he's no longer their CEO, but he had quite thought leadership around taking in this. No problem. He took the Sustainable Development Goals, which are 17 goals, broad UN-based goals, cover things like, I think half a dozen of them relate to climate. Some of them relate to gender inequality, different things. And he lined it up against his financial and operational dashboards. And he was able to demonstrate how the company was moving or creating value against those goals. And that became something that also created shareholder value too. Now, Unilever is an interesting organization because they're a multinational company, but their primary markets are in the Southern Hemisphere. So Asia and Africa, in the developing world. And so he recognized that the need to overlay a development agenda onto the, I'll use your wording, the profit maximizing intent of the organization, and having alignment and fluidity between the two was really important. I'm sure if you Google Unilever, and I think his first name was Paul, can't remember the last name, the CEO, there's lots of information on that. At the same time, and this is a bit of the hypocrisy that comes with some of my in my remarks, is that the Business Roundtable, who have come out and explicitly said, hey, we've got to have a different purpose to corporations and maximizing shareholder value, I don't see a lot of action from them right now. Like, I think the changes are small. So there's a difference between the aspiration and where we're actually at in this new economy. But I think we're at the beginning of some big things. But that would be the one reference point I have for you.
Thanks. That's great. Does that answer your question, Mark?
It does, yeah. Thank you very much.
Great.
Perfect.
And locally, there are, I know they're both consulting firms, but Scale Collaborative again is quite involved in this space, but also Jill Doucette. I'll have to look it up, but there's an organization in Victoria that does quite a bit of work in this area as a consulting firm. So I think we'll kind of touch on the Indigenous or First Nations part of this, and one of the comments is around decolonizing wealth, and and another question is examples of philanthropy assisting Indigenous-led First Nation businesses. Do you have any comments on that, Andrew? Any experience with that?
Mm-hmm. Yeah, I think there's a lot of there. I mean, there has to be some acknowledgement here that wealth that's been created in this country has come on the backs of others, in particular Indigenous people. We're highly resourced, high resource-driven economy, and I think there's got to be that truth that comes with our work, that hey, this capital that has benefited many but controlled by a few comes on the backs of others. And this was the challenge that people like Rockefeller had, or Carnegie. They built massive amounts of wealth, and at the same time, the companies that they ran didn't pay much money to most people. Unsafe working conditions, and they were engaged in extremely extractive processes. And so, the truth around that, acknowledgement of it, then but by doing that, by virtue of that process, it means we now have a responsibility with that capital. And we have to think about how we're deploying capital in the frame of justice, which is a big conversation and a complex one. It is one that's floating around. Philanthropy is still trying to confront that. We don't have the answers on that, but we're thinking them through now. There is talk about, what is restitution, what does reparations look like in constructs of where capitals come from. I saw in the chat somebody referenced Edgar Villanueva's book, Decolonizing Wealth. It is about that. It is about recognizing where capital is from, how we might think about reparation and restitution, and then deploying that capital in a new way. There's an organization called the Future of Good. They conducted a study of philanthropic foundations, in particular community foundations, and they looked at the investment committees of those foundations. So those are the committees that look after the capital, invest the capital, deploy it, try to generate that rate of return. They looked at the composition of those committees. Those committees were primarily made up of men and primarily made up of white men. And, to the point that's being made in Edgar Villanueva's book, those that control capital is also an important part of decolonizing wealth. And so we'll have to take a look at how we can do better in those areas. And that's just all about diversity, inclusion, and bringing other people to the table on decisions pertaining to capital.
All right. Well, we're lucky to have you interested in this and your wealth of knowledge to share. So thanks again. Somebody's asked a question about how much funding is available, and what about things like medical clinics, swimming pools, and social housing, and so. I think we're really talking about for-profit business investments that So correct me if I'm wrong, but medical clinics, swimming pools wouldn't necessarily fit that criteria. However, well, that's not true. I guess you could use a swimming pool with admission costs, but certainly housing. So. That's a big area we could invest in. We could also move forward. And there's certainly I know a lot of work at all levels of government and in the community around funding housing. And I'm sure the credit unions are a big part of the mortgages for those. What's your thoughts there, Andrew, on focusing some of the community foundation endowments on housing projects versus social enterprise businesses?
Yeah, that's happening. There are quite a few community foundations that are working with their local credit unions, their local banks, developers to create and facilitate affordable housing in their communities. So we are down the line on a lot of that work. And as it pertains to swimming pools and medical clinics, like community foundations can grant to any organization that's a charity, or what they call in the Income Tax Act a qualified donee. And then we can invest in profitable businesses or businesses that have a purpose of making profit. And we can invest in those organizations. So there's the granting side of things, and there's the investing side of things. Depending on where you want to play, depends on the nature of the organization you can work with.
That's great. And I'll back myself up a little bit. It's Synergy is the group, Mark and Victoria, that does a lot of work in that area. The other thing I wanted to say about the Indigenous-led and the First Nations from a local level, there's the SAGE initiative, which is a really interesting young Indigenous woman that is helping young Indigenous women learn about private equity. It's really quite bold. So it's called the SAGE Initiative. The other one is Carol Ann Elton, which is getting more popular by the minute. She's the one that has the call to action around the $100 billion Indigenous economy. She's got a lot of interesting things to say. And again, you're seeing a lot of that cross-pollination into these conferences. Like I know Carol Ann speaking at the Purpose conference that Tanya mentioned. So she's getting a lot of opportunity to bring that message forward. And then Raven Trust, I know UVic's invested in them. They're a later stage venture capital, Indigenous focused investment fund. So there is you know, kind of the higher level stuff's being is there. So there are lots of good local examples. And so if we get more into the tactics, what advice would you give Vancouver Island Foundation board members as they move into strategic planning efforts for the upcoming year in terms of optimizing their endowments to more actively invest in their communities? Where might be a good starting point, researching local opportunities and adjusting investment policy statements? So what would be your, you know, next first steps, next actions if somebody wanted to pursue this?
You know, oftentimes we want to jump to the tactics, as you said, Peter. You know, look at our policies and you know, create frameworks to do things better. And I've been a part of that. I feel as though we're at a moment in time when it's not about the tooling per se. It's about coming to grips with established norms or things that are so deeply entrenched that we don't even question them. And when I think about a community foundation, you know, that could be many things. Like our primary vehicle for having impact is granting. And I would do something very provocative as an exercise, which is to say, challenge that notion that our primary way to have impact in community is through granting, and do it thoughtfully. Really lean into that. And people say, well, if that's not going to be your primary way of having impact, then what is? Well, we can have impact through investing. And if we put as much energy behind how we invest, do we yield better returns than primarily putting our energy behind how we grant? As an example, everybody's going to arrive at a different answer on that question. But it's an interesting exercise to undertake. So I would start to do those things. And even if you're looking at investing, you know, how much permanent capital do you need? Do you really, you know, the other thing is we create these things where they're called donor advised funds. So it's where we create funds that have money in them. And then the donor attaches a specific intent or purpose around that fund. And oftentimes we're able to compel the donors what to do. Other times the donor has his mind or her mind made up. But what happens is over time, sometimes the intent of these funds are misaligned with the priorities of the community. Donor may pass on, children are uninterested in the fund or less engaged. And now you've got a pocket of capital that's not deployed in the most optimal way against the priorities in the community. We have to think about how we want to position donors in our work. They're important, they're needed, they're critical to the process, but do their intentions trump everything else? And that's another established norm, default setting, if you will, that we need to take on. So there's many of these things. So what I'm saying is that let's just challenge what we take for granted, what we don't even think about, because that's where the transformation starts. And then you get to the tooling and the policy creation and the new ways of doing the work. But yeah, I think at this point in time, challenge your mental models. That's the most important thing.
Well, and again, you know, I think this is a great example, having you talk about the subject at an economic conference. You know, that you know, this is where we are today. Is just you know, having thought leaders like yourself influencing different groups of people about these subjects. So we need to cross-pollinate the conversation more. The other thing I wanted to bring up, and I want to bring up this idea of risk. And the reason I say this is when you and George were talking, and we know George is on the Nanaimo Community Foundation. That was kind of his knee-jerk reaction was, oh yeah, we're assessing risk, we're looking at risk currently. Where does that fit into the conversation when it comes to this? Because again, these are volunteer board members. They're not necessarily, CFA trained investment, gurus that are on these community foundations. They're more on the granting side. And they rely, most of them, as far as I understand, rely on outside fund managers, traditional fund managers that give them that portfolio. What's your thought on what are some of the barriers these boards would face that they're going to have to overcome emotionally, from a leadership point of view, that sort of thing? And you can even say the executive directors that don't want to change. How are we going to overcome that?
Yeah, Peter, I mean, you talked about risk there. I think that's a good starting point. Yeah, so in philanthropy, right? Our job is to build stronger, better communities or resolve an inequality, do something positive for humanity, mankind. Like that's the founding purpose. That's the root of philanthropy. And I think you're absolutely right. We get into a boardroom, and then much of the conversation that's around risk is protecting capital, right? It's risk associated with the protection of these endowments. Yeah. And I think that's a fundamental challenge. It's a mental model thing again, because it ignores the risks of inaction. It ignores the risks of allowing poverty to exist. It's the risk of allowing the lack of affordable housing supply to exist. It's the risk associated with people having despair, as Viktor Frankl talked about. What's the cost associated with that at the systems level? And oftentimes we situate risk at the institutional level, more specifically its relationship to capital. And this is what gets us into trouble, is we have to think about risk at a system, community, local level, because the cost there of inaction is astronomical. And it far outweighs any value of any endowment. And so I think if we can put the risk conversation and the leadership paradigm at that level, at the system level, we get different answers.
That is a great answer. I feel like the billboard coming into every community should have that, statement on it. Yeah, no, I think that's very, very succinct and the right message. Thanks, Arn. I see you've given us a link about the Municipal Fund Council. Feel free to put your hand up if you want to talk about that with the group, and let us know what your thoughts are there. So yeah, Arn, if you just want to turn your self on, there you go. You're muted, Arn, just so you know.
I want to echo Andrew's comments. One of the things we've been doing is a lot of research into risk, and the more you understand risk, the more audacious you can be. I think that's part of what we're doing. And we want to be a lot more audacious at the federal level. We had a lot of money. We've had a couple of billion to spend. And so it's small next to the whole of Canada, but it does help out. We have a program, I think we have 300 million for essentially net zero green municipal, net zero social housing, and anybody can apply for that. That includes housing federations, housing cooperatives, those kinds of things. We also do green infrastructure, swimming pools, hockey rinks. A lot of it is basically building for the future. And just, again, I'll just echo Andrew's comments. We need to be a lot more audacious, and we are trying to do that. So I also work on the island here too, so I'm happy to be the recipient of the other sorts of funding that go along. So thank you. Thanks again, Andrew and Peter.
Well, thanks for bringing that up. Anybody else have questions or comments they want to share? So if you think, Andrew, about next steps, and I keep coming back to that, like, do we need more education around this risk idea that you bring up? I mean, is that one of the things, you know, we were collectively, I mean, as a nation community, you know,
Yeah, you know, like one of the things I think about is like we could choose to do nothing. Like people like you and I, Peter, we could choose to do nothing, and would the change happen anyway?
right.
And I think it will. Like I talked about millennials and younger generations. Their investment behaviors are not just moderately different than ours; they're radically different. Radically. You know, the climate crisis doesn't immediately impact you and I, Peter. You know, but it does for another generation, for younger generations. They are going to live with they're going to have to live with our inaction and slowness in responding. And so I think the change is coming no matter what. I feel as though there's a younger generation that will have to deal with urgency and will be willing to blow up the status quo and the stasis, and because they'll have no choice. They'll have no choice. You know, like this is the dichotomy that exists right now, is like we have things that we call permanent capital, right? In philanthropy. So this is capital that lasts forever. And the IPCC report contends that we're not going to be like, well, first of all, nobody's around forever. And that future generations are tangibly at risk because of the climate emergency, because of the code red. And there's just complete lack of alignment on how our capital is deployed, and that very real existential risk. Larry Fink, in his letter earlier this year, made it clear that we need to go through a massive, massive transition, and no sector will be spared from it. And oftentimes you know, people like you and I, and those are on this meeting and this call, talking about incremental change. Transition is not incremental change. It's transformational change. And I think we got to go further than that. And if we don't, the other generations will. I think that change is coming whether we like it or not. I don't know that I have the answers to that question, because I was educated at a different time with my own mental models and bias that I'm working on, but I don't know that I can change them quick enough. And I know that that sounds bleak, but this is hard. This is hard work to change the way you think about things.
Well, I think you said it succinctly. It was perfectly put that you know, that next generation is going to have a sense of urgency to make the change, and we can make it easier for them. We can include them, you know, in these boards, change the design of the board makeup, you know, and the board culture, and start there. So there is something we can do by just including them in a leadership role, not in an advisory or consultative role, to actually put them in those leadership positions. One of the things that, you know, that I'm always cognizant of is we have to remember that, you know, whatever we do today might actually be the wrong thing, you know. And if you look at history, you know, I'm pretty sure that you know, that people didn't feel they were doing the wrong thing when we look back in history and think how awful, you know, that was. But I was on a call with some university presidents, and they were talking about reconciliation, and I thought, man, what a hard time to be involved in post-secondary, and you know, and trying to come to grips with that, because probably everything they're going to do today will not be the right work, and to accept that would be really, really challenging. So yeah, so I think just including young people might be a good first step in a leadership capacity. And I think we're seeing that in the climate space now, for sure. We'll see that more in Glasgow. So Doug's brought up a point, and I'll expand a bit on this, but he's interested in crypto, obviously, and wondering where that fits into the work you're doing. And I'll add to that around distributed DAOs, distributed autonomous organizations, because that something that's coming at us fast and furious in the next couple of years. So what's your thoughts on?
Yeah, I've been watching. I've been involved with a lot of conversation in the past few months on cryptocurrency, and I think it's coming. I think it's real. It's already happening in the U.S. Like there is. I think in the city of Miami, they've aligned
Right. Yeah.
a big project there using a type of cryptocurrency. The philanthropy workshop last night had a guest speaker on to talk about cryptocurrency and social impact. So it's happening. And I think this is a huge delineation point in philanthropy, because philanthropy is typically, our philanthropy is really there to serve a particular type of wealth. And for lack of a better term, a bricks and mortar type of wealth. And what we're seeing now is that there's a whole slew of young Canadians who have 10-figure bank accounts that have done well in venture, have done well in tech, and are not interested in the philanthropy, that sort of this mainstream philanthropy. And they are gravitating towards cryptocurrency and understanding how cryptocurrency can facilitate the movement of some big social issues. I think we're at the advent of it. It's not well understood. Cryptocurrency is a very hard thing for most people to understand and to absorb. And the instant something becomes difficult to understand, you shy away from it. You pivot away. But there are some very impactful Canadians, younger Canadians, that understand really well. And I think they're going to do some amazing work in this. So that is the future. I don't pretend to be an expert in cryptocurrency. I am not. I understand.
Play one on TV.
I understand it at a juvenile level, but I know it's moving.
Well, and I think where that's going to probably start is in the international side of philanthropy as opposed to the place-based or local. That I think we're already seeing that in Africa and the emerging continent. Again, more reason to include young people in the leadership of these foundations to be a bit more connected to these ideas for sure. But yeah, I agree. I don't think that's going away. So any other thoughts, Andrew, or things that you've been thinking about even through this conversation that's come up for you? Any resources that you want to share with people?
No, I was following along in the chat there. It looks like there's a lot of great work being undertaken in this area, lots of great resources and conferences and things happening. So I think the changes, I don't think the change is in front of us. I think we're living through the change right now. So the opportunity is within that. And yeah, I think we talked about a lot of things, Peter, covered a lot of bases.
Yeah. But yeah, we're still at the call to action, aren't we? It's interesting, and certainly that's the work that Janet and I have really taken on, is thinking about what are the big movers that that can really, like you say, not the incremental but the transitional, and it's tricky for us. My experience firsthand, or our experience firsthand, is helping people think about that non-incremental shift that and I would even argue that with the public sector, not just with the philanthropy sector. That we're really seeing a lot of indicators from the government that those big changes, those big radical changes, are very hard for someone to take on and take that kind of leadership risk. So, it might be my bias, but a lot of this seems to be really driven around that bold leadership is what's needed and what we're looking for. Mm-hmm. And we're still using an old operating system when we need a new operating system for a lot of this work. So that, to me, that's the hard work right now is bringing people on board to these new ideas. Now that we have a deadline with the climate conversation, that in the history of the human race, we've never had a deadline before. And I think that I'm fascinated to watch both the thought leaders, but also, you know, the community and civic leaders having a hard time grabbing onto those ideas and really aggressively moving them forward. You know, do you see that anywhere in the world from your research where somebody's taken on one of these big ideas, not just in Canada, but anywhere, and really push them forward?
Mhm. Yeah, you know, I think a lot of like innovative organizations are doing that. You know, some of you might be familiar. The former chairman of Google, you know, he had this 70-20-10 rule, and that was about, you know, in any organization, 70% of your work should be on the core, 20% should be on stuff that's adjacent to the core, and 10% should be on like really radical, big, crazy ideas. And, you know, for different organizations in different sectors, that percentage plays out differently, depending on who you are and what you want to do and your purpose. But every organization, every corporation, at least in the public realm, has a highly innovative agenda somewhere. It could be 10%, it could be more. We're seeing it. It's playing out. Every province has an innovation agenda or an organization that's there to facilitate innovation that's funded by taxpayer dollars. So we're trying to innovate like crazy. We're putting a lot of public taxpayer dollars into it. Corporations are putting a lot of their own money in innovation. Innovation's our future, but they're innovating around the issues that matter today. And that is getting to carbon neutrality, getting to a healthy energy transition, ensuring that there's diversity, equity, inclusion in our economy, that we have a stable economy, that we have an economy that not just values GDP growth, but values well-being, an economy that's sustainable for future generations, an economy that's stable, so that when we do have shocks to the system, we're not out on the street. And that means building the right type of social safety net for the future. We'll have a growing gig economy. We have people that don't have access to defined benefit pension plans or even defined contribution pension plans. You know, so you've got all these things that are playing out, and innovation's happening at every sector, at every level. So I feel like I feel hopeful about that. The question is can we make it happen quick enough, and do we have the right innovations playing out?
Yeah, and to add to that, you know, proactive financing, I think that's one of the areas that is going to evolve. That, you know, we have a very established debt financing. We have very established private equity. We have a growing venture capital, but it's getting that investment into that micro or into that commercialization spot in Canada. So there's lots of opportunity in the financing for new financial vehicles that you know, that are going to help in that innovation acceleration, especially around the climate side of it. Yeah, Bruce Maw, that's another name that's come up a few times recently. MAU, he's been doing some really interesting work about, you know, that call to action around designing the future. And MC24, I think is the title, but I've heard that it was actually Vita Cobb that first introduced it to me from Shortfast, and then I've had a lot of other people bring that forward too. So there's certainly some people with some great ideas, and you know, just now bringing those to the local level, I guess, is the work we need to do.
Yeah.
Yeah, I'm trying to think what you know, we have another group here. It's ICE-T is the acronym, the Island Communities Economic Trust. Oh, there you go. I recalled it. That's an interesting. So we have trusts around British Columbia, and I think they're either some of them are run as endowments, and some of them are spending down the money. Do you see a relationship there, or any kind of connectivity between community foundations work and these government or publicly funded trusts? Is there an opportunity there to?
Offhand, I am unfamiliar if community foundations are working with these government trusts. So I can't really weigh in on that at this point.
You haven't had any experience there. The other thing that's come up that I find interesting is this idea of unrestricted funding. I know here we have an organization called Power to Be, and Tim Commode has partnered with a private donor, and they've started something called Power to Give, and it goes back to asking about Indigenous-led work and First Nations business. They've actually funded a lot of Indigenous economic development projects up and down the coast with this Power to Give, and they're taking on this model of unrestricted funding. So, kind of changing subjects a little, what's your thought on this idea? Because it seems to be quite popular. I know there's some books that have been written about it, and in the U.S. it's becoming talked about quite a bit in the philanthropic sector.
Mm-hmm. Yeah, I guess Mackenzie Scott gave away about $4 billion to about 400 organizations. And my understanding is that it was primarily unrestricted money, very flexible, no strings attached money, not a lot of reporting that goes back in. And this is a form of trust-based philanthropy that's getting a lot of attention right now, Peter, which is, just give the money to the organizations that know how to use it the best. Don't tell them what to do or how to do it. They know what to do. They know how to do it. They're frontline. They've got their own boards. They've got great leadership. They're well governed. They're well led. They can do a lot with a little. So why not get behind those organizations? Why hamstring them with a bunch of reports and bureaucracy that takes them away from their work? And we're seeing more and more of that. Community foundations are a great example of how that's happened during the pandemic. Early on, we saw a lot of frontline organizations shutting doors, being unable to deliver, unable to raise money. And community foundations, in partnership with the United Way, Canadian Red Cross, and the federal government, moved a lot of money to those organizations. And it was very flexible money. It was there to support operations, not project-oriented money, although money would have gone to projects to support very specific outcomes and specific work during the pandemic. But it was at the discretion of the frontline agencies, not at the discretion of philanthropy or the federal government. So, we're seeing this play out. And I hope that we can get to that it's not temporal, that it just doesn't exist during the pandemic, but it becomes part of what we do going forward, because organizations need operating money. We have this just terrible mindset in the charitable realm that all dollars have to, there's nothing for overhead, and we've done it to ourselves. It's a race to the bottom. Who can run the cheapest organization? And it's not a good way for retention. It's not a good way to build leadership and capacity. It's not a good way to have sustainability over the long term. We have to invest in operations. We need donors to understand we need to invest in ourselves so that we can invest in the community in the most optimal way. It's a mental model that's hopefully dying, and we'll never see it again. And it actually informs the regulatory environment because, in the Income Tax Act, it says if you're a charity, you got to spend substantially all of your assets on your mission. And investing in operations is not part of the mission. And substantially all is defined by the Canada Revenue Agency as 90%. So if you're spending 90 cents on the dollar on the work that you're doing in the community, which is important, that's why you exist, and you're only keeping 10% to deal with overhead and employees and all the other things that cost to run a business, it won't be long till you can't meet your community responsibilities. It's just archaic. It's old, it's obsolete, and it needs changing. And yeah, I think funders are a big part of that conversation. Donors, unrestricted money, absolutely critical.
Well, I'm glad I changed the subject there. Yeah, I think, and again, on the local level, I think Tim Commode from Power to Be is certainly a good example of somebody that's testing these theories out pretty aggressively. And it goes back to the crypto conversation, these DAOs, distributed autonomous organizations. That's the kind of exploration work that, like you say, those millennials are probably looking at now. As certainly they those are the kind of things that are going to make that really simple to do. Arn, I see you've got your hand up again. Do you have something you want to share if you want to unmute?
Yeah, just to that point on, so wearing another hat, I founded and led Canadian Cycling Association with Velo Canada Bikes, and we were able to get 400 million last budget for active transportation across Canada. But what I wanted built, and the original ask was 5.4 billion, so a little short, but still not complaining. But what I wanted to build in, and this is based on the European experience, and I think this is an example which I'd like Andrew to comment on. In Europe, I talked to all the European leaders of cycling associations. I met all of them in England. I met with Parliament, 100 members of Parliament who are in the cycling caucus. I had my own cycling caucus with 15 MPs, wasn't much, but it's a start. And what we wanted built into that framework was that when you do a roadmap or strategy, that you build in funding for the advocacy or the social organizations that are involved in making it happen, because that's where you're getting some really big bang for your buck, some real big value added. And I wasn't successful with this one. I was actually more successful with the previous Conservative government, but they got voted out just before they implemented it. So the question is, can we not build in funding for our social organizations, are not NGOs that are doing this fabulous work and are scrambling for dollars? Your response?
Yeah, Ernie, I just want to make sure I understood you correctly. Like building in the ability to work, not just work on the tangible side of the work, but also to advocate and have a relationship with government to change laws and regulations. Is that the question?
That is it. And I understand there is a sort of moral principle of not funding advocacy, but when that advocacy is non-political, when it's apolitical, and when it is basically producing great results, why not?
Yeah. So yeah, and I think we have the regulatory environment in Canada that allows that to be permissive. So we have political activities, political activity law within charities is that you can spend as much money as you want on political activities, which includes advocacy, as long as it's subordinate to your charitable purposes. And so here's the thing, like we have a permissive regulatory environment to allow it to happen. If you look at charities en masse in Canada, if you pull down their regulatory filings, my guess is they probably on aggregate don't even spend 1% of their funding on political advocacy. It's a cultural thing, I think. I think we're afraid to lobby the government because we're afraid that if, depending on who the government is and what position we've taken, that we are polarize ourselves or put ourselves in a political conversation that we may not be courageous enough to have, or that we're just avoidant of conflict. And so I think it's a choice that charities need to make, organizations need to make, and they need to have the muscle to do it. And they need to your point, if you're dealing with funders, whether they're private or individuals, you need to say, hey, like, can we put some of this money aside for advocacy? But you have to recognize that when you when you do advocate with government and undertake political activities, it comes with a new set of risks, a new set of consequences. And I think a lot of organizations aren't they're not ready for that yet. But to your point, and I agree with you, it's a big thing. Like if you are working with a government, you can make some pretty substantial changes. The problem is that when governments change and you find yourself on the other side of the agenda, it requires a lot of leadership, time, and resources to shift.
Right, and I think I wasn't just speaking of pure political advocacy so much as advocacy on whatever it is you're doing, whether it's so the Biogas Association in Europe, the cycling associations across Europe, they all are funded by government. They all get funded. Their core funding comes from government so that they can do the good work they're doing.
Mm-hmm. Yeah.
So thanks for that. Any further comments as well? Go ahead.
No, thanks, Aaron. That's interesting.
Thanks, Aaron.
Tanya brought up a good point in the comment. She said, hand in hand with unrestricted funding is also reimagining the impact measures and reporting. And I know there's so much work going on in that space right now, and and even some of it's controversial. I know the ESGs are being challenged quite aggressively right now as a way to get government to do less regulations, and so there's some really interesting stuff going on in the measurement and reporting. So we'll see if ESGs survive the rest of the year, if it gets. So we're going to wrap up. This has been great, and like I said, Andrew, I hope we can convince you to run one of our foundations out here on Vancouver Island and get you out of Toronto. And you're a wealth of knowledge. I've always appreciated your time and being able to learn from you. I feel like I learn every time I talk to you. So I think we all really appreciate you doing this. And I think it is new. It's a new concept to talk about this stuff as an economic conference. So I appreciate I know you're busy and taking your time out of your day. And for me, having that wealth of knowledge, accessible like you is really important. So thank you for committing your life to this work. And the takeaways, and it'll be interesting what other people think. But the takeaways for me are really consider, the leadership of these endowments and foundations, as well as the CEOs or executive directors, to start thinking about younger people. And, and I think of that as like under 30. And, it doesn't mean there can't be a lot of coaching and advising and mentoring, but wouldn't it be interesting if we had a foundation with a CEO that was under 30 and a board chair that was under 30 that still had a lot of wisdom on the board and the advisory, but was willing to, take those risks. So I'm looking forward to seeing that 25-year-old in the head role. The other thing is really exploring this unrestricted trust-based philanthropy. I think I see a lot of it in the U.S., and I think that's an area we really need to work hard in. And then, of course, bold place-based investing. It's really up to the investment committees now to start taking a serious stab at some really bold investment and place-based investment ideas. So do you have anything you want to kind of finish off with, Andrew, that you'd like people to know, or ways to get a hold of you?
Yeah, thanks, Peter. I appreciate you moderating, appreciate everybody participating and expressing their points of view. And you can Google me, and I think my email address is public. So if anybody wants to reach out, feel free to do so. Thank you for the time.
Yeah, well, thank you very much. And I just, on a last note, I want to thank St. Jean's Cannery for their years of providing gifts for the speakers. And this year, the gifts are actually coming from Island Good, so islandgood.ca. And I think it's a food and beverage, but it might have other products. But it's basically an assortment of locally made products. And Andrea, they'll be sending you out a gift basket of that. So Thank you for Island Good for being one of the sponsors. And it's not a check, but it's a nice gift to receive. So thank you. I know this is a couple hours.
Island hospitality.
Yeah. Okay. Well, you're always welcome. We'll put you up in any community, and hopefully we can get you to speak more to the community foundations out here. See if we can get something going on the island.
For sure. Thanks, Peter. Thanks, everybody.
All right. Thanks everybody for taking the time. I know this is a new and tough subject, so I appreciate everybody spending the time today.